Welcome to this week's African Agri Overview. This week we'll be focusing on the Zambian maize market, with prices reaching record high levels immediately post-harvest. We also take a look at the latest poultry and grain prices over the last month in Lusaka. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview. Before we dive in, however, I'd like to encourage you to follow us on YouTube. By doing so, you'll gain access to regular insights into the agricultural markets of Africa. Our goal is to provide you with valuable information that can help navigate the dynamic world of agriculture on the African continent. You can also contact our regular market analyst Jacques Pinaar for more detailed reports and information on the African soft commodity markets. However, before we switch over to Jacques, let's take a look at the latest news on the global economy. Brent oil prices broke through the price ceiling last week, with the latest price now on $90 per barrel. Lower global production and surprising economic figures from China pushed these prices past the $88 mark. Next support levels are at $94, but I feel that prices may stay at current levels for now amidst lower global demand. The US dollar also gained significant support due to global economic uncertainty and the slowdown in economic growth in China and the EU, pushing most investors back to the US dollar. The kwacha therefore weakened significantly against the dollar and is currently trading on 20.73 kwachas per dollar. These two factors combined will result in higher fuel and transport costs very soon. Poultry prices stayed on a higher level amidst the grain prices that is also higher. The day-old broiler price stayed on a lower level of 15 kwachas per head, while day-old layers stayed on 15.5 kwachas per head. Layer cull prices, however, decreased slightly to 49 kwachas, while live broilers traded slightly lower on 85 kwachas per head. The average egg price also decreased to 49 kwachas per tray due to low demand at the moment. The latest grain prices in Lusaka had mixed results, with the maize price decreasing to $360 per metric ton. Soybeans were lower on $430 per metric ton, with the latest soy meal price also lower on $440 per metric ton. Wheat prices, on the other hand, increased to $540 per metric ton. Jacques Pinaar, our regular market analyst, will now focus on the latest news from the Zambian maize market. Over to you, Jacques.
Good day. This week we revisit the Zambian maize market. The Zambian maize prices has reached record high levels. Their harvest season almost done. However, one would not have expected these high prices immediately post-harvest. Let's look at the Zambian maize SND to try and find some answers. This graph illustrates our Zambia annual maize balance sheet for the past 4 years, as well as our 2023-24 forecast, covering May 2023 to April 2024, which we will focus on. We continue to use the Zambian government's latest production forecast of 3.26 million tons. Several observers feel the crop is smaller. However, government's track record forecasting maize crops has been good for many years. We believe it could rather be an underestimate of local demand being the reason for continued tight supply. As indicated in a previous podcast, we believe population growth in food and feed milling capacity, as well as an expanding poultry and brewing industry have been underestimated for the last few years. Our local annual consumption estimate at around 2.6 million tons. We have lowered our beginning stock number as the FRA carry-in stock seems to have been overestimated. We have increased our export number to 600,000 tons due to speculation that informal exports to Tanzania and Malawi since June have been underestimated. We do not expect formal exports of maize or maize meal will be allowed this season. However, given the expected tight supply in the region for at least the next 8 months, government will struggle to contain informal exports through porous borders to Tanzania, Malawi, and the DRC. That said, observers are indicating high local prices are slowing informal exports Also, Tanzania currently harvesting their main crop and they have stopped importing from Zambia and only expected to be back in the import market Q2 2024. This leaves ending stocks at around 200,000 tons, a small number for Zambia. Estimates the FRA, government procurement arm, has around 400 to 450,000 tons in strategic reserves, including carry-in stocks. If our projections are accurate, government will need to distribute at least half their reserves before June 2024. All in all, a tight maize balance sheet. Remarks by government indicate they are concerned about maize supply next 8 to 9 months and worried the country might need imports before the next crop harvests mid-2024. Also, government is concerned about current high maize meal prices and the affordability factor that goes with it. Rumors doing the rounds, a government announcement addressing these concerns is imminent. Talk of an early planting maize program to make it attractive for commercial and upcoming farmers to plant early and harvest April-May 2024. Imports for the feed and brewery industry could also be an option. This graph illustrates the Zambian maize price history since 2012. Zambian prices currently trading at record high levels as indicated by the red circle. Only during 2013 and 2019, when drought conditions limited supply, did prices come close, as indicated by the blue circles. The two brown lines indicate the price trend higher since November 2021, to a large extent driven by export demand to Tanzania and Malawi for most of this period and an average size crop mid-2022. The question begs how Zambia prices could respond the rest of the year. Observers still feel prices unlikely to move much below $300 a ton, short-medium term, due to support from growing local demand. Is there further upward price potential? Difficult one to answer, but we get the idea. Current high prices have slowed exports significantly. Affordability of maize meal could become a factor, and government's uneasiness with current high maize meal prices could see them intervene. The market feels these factors could limit upward price potential. A price range between $300 and $350 a ton, probably a realistic outlook. An important positive that could flow from the current season's high prices is increased plantings next season. The region needs more maize supply. There are more and more reports regarding the strengthening El Niño weather pattern that normally cause above normal rainfall in countries like Tanzania, Uganda, and Kenya, and below normal rainfall in countries like Zambia, Mozambique, Malawi, Zimbabwe, and South Africa. As more information becomes available in this regard, it will have to be included into our production models.
Thank you very much, Jacques, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan Africa's soft commodity market, I encourage you to reach out to Jacques Pinaar. Remember, for a deeper understanding of the ever-evolving African agri landscape, stay connected with us. I'm Dr. Johnny van der Merwe, and thank you for watching.